Kofi Amoabeng's phone buzzed in his palm. Again. He squinted at the screen, his eyes adjusting to the morning light streaming through the curtains. 11 missed calls. His chest tightened. Something was wrong. He scrolled through the names. Business partners. Former colleagues. His daughter. He exhaled sharply and tapped to call her back.
Dad, have you seen the news?
His grip on the phone tightened.
No. What is it?
Turn on the TV.
Frowning, he reached for the remote. The television flickered to life, and there it was. The bold red banner slicing across the bottom of the screen. Breaking news. Bank of Ghana revokes UT Bank's license. The breath left his lungs. On the screen, the Bank of Ghana's headquarters filled the frame, followed by images of UT Bank branches. His branches, now under the control of Ghana Commercial Bank. Reporters' voices blended into a blur, words like insolvency, takeover, and liquidation cutting through the static in his mind. He sank onto the edge of the bed, phone still pressed to his ear. His daughter's voice wavered.
Dad, are you okay?
For the first time in decades, Prince Kofi Amoabeng, the former military officer, the entrepreneur who built UT Bank from nothing, felt powerless. Kofi Amoabeng's grip on the remote tightened. He barely heard the news anchor's voice over the pounding in his ears. UT Bank, once one of Ghana's fastest-growing financial institutions, has had its banking license revoked by the Bank of Ghana. The government has approved an immediate takeover by Ghana Commercial Bank to protect depositors. The screen cut to footage of customers standing outside UT Bank branches, confusion and anger on their faces. Some held phones to their ears. Others knocked on locked glass doors. The reporter's voice carried a tone of finality. This marks the most significant banking collapse in Ghana's recent history. Kofi Amoabeng leaned forward, elbows on his knees. His mind raced through the years. Long hours, boardroom meetings, risks taken, battles fought. He had built UT Bank from nothing, and now, in seconds, it was gone. He barely registered his daughter's voice still on the phone.
Dad, are you okay?
He swallowed hard. Finally, he spoke.
I hear you.
But the truth was, he was only just beginning to understand what had happened. Chapter 1. The Rise of UT Bank. Kofi Amoabeng closed his eyes for a moment, the voices from the television fading into the background. His mind drifted back, years before UT Bank's name ever graced the headlines, before the boardrooms and the financial statements. Back to where it all began. 1997. Accra was a city of opportunity, but for small businesses, access to capital was a constant struggle. Traditional banks turned them away, demanding collateral they didn't have, guarantees they couldn't provide. Amoabeng saw the gap, and he saw a way to fill it. With a military background and a mind sharpened by business acumen, he wasn't one to sit and wait. He partnered with Joseph Nsonamoa, and together they started a lending company, Unique Trust Financial Services. It wasn't a bank, not yet, but it was something. At first it was small, microloans to traders, shop owners, and startups that couldn't get a foot in the door elsewhere. No red tape, no unnecessary delays, just capital when it was needed most. We weren't just giving loans, Amoabeng would later say. We were giving people a chance. Word spread fast. Borrowers paid back on time. The trust grew. Within a few years, Unique Trust had built a reputation, efficient, reliable, different from the old-school banks. By the early 2000s, the company wasn't just thriving, it was transforming. It was time to take the next step. In 2009, Unique Trust Financial Services became UT Bank. And for a while, it seemed unstoppable. Chapter 2. Expansion and the Seeds of Trouble. The transformation from Unique Trust Financial Services to UT Bank wasn't just a name change, it was a statement. A bold declaration that the institution was no longer just a lender, but a full-fledged bank, ready to challenge the traditional players. From 2009 onward, UT Bank grew fast. Too fast. It wasn't just about giving loans anymore. The bank expanded aggressively, opening new branches, acquiring major clients, and even purchasing BPI Bank, a move that signaled its arrival in the big leagues. The media hailed UT Bank as a Ghanaian success story, a model of homegrown entrepreneurship. Kofi Amoabeng himself became a symbol of ambition and innovation. "We believe banking had to change," he later recalled. "We were in the business of solving problems, not creating them." But behind the success, cracks were forming. Aggressive lending meant higher risks. UT Bank was still operating with the mentality of a micro-lender, quick approvals, flexible terms. But now, the numbers were much larger. Clients borrowed millions. Some couldn't pay back. The bank's loan portfolio swelled, and with it, the number of non-performing loans. Still, confidence remained high. Investors believed in UT Bank's unconventional approach, and so did its leadership. Even as red flags appeared, the bank pushed forward, convinced that growth would solve its problems. But growth doesn't fix bad loans. And soon, UT Bank's rapid rise would hit an immovable wall. This video is brought to you by herbalgh.com, your go-to directory for all FDA-approved herbal products. Looking for safe and trusted herbal remedies? herbalgh.com makes it easy to find and order authentic products with confidence. Check them out at www.herbalgh.com. Chapter 3. The Cracks Within. Internal Mismanagement. Inside UT Bank's boardrooms, the energy was still high. The bank had built its reputation on speed, quick loans, quick decisions, quick expansion. But behind closed doors, not everything was running as smoothly as it seemed. One of the first signs of trouble came from within the loan approval process itself. Unlike traditional banks that relied on rigid, data-driven risk assessments, UT Bank prided itself on flexibility. A business didn't need perfect collateral, just a strong track record and a good relationship with the bank. Decisions were often made faster than standard banking norms allowed. It was this speed that had made UT Bank so successful in the first place. But now, it was also its greatest weakness. By the mid-2000s teens, the bank's loan book had grown too large, and a dangerous pattern had emerged. Some loans weren't being repaid, yet new ones kept being issued. The bank's leadership, confident in its model, continued to approve high-risk loans, believing the businesses they funded would eventually bounce back and pay up. "We were not a conventional bank," Amoabeng later admitted. "We believed in people, not just numbers." But sometimes, belief is not enough. Internally, tensions began to rise. Some executives warned that the risk exposure was becoming unsustainable. Others insisted that UT Bank's strength was in its ability to take risks others wouldn't. But one thing was becoming clear: liquidity was tightening. The bank was running out of cash. Then came another problem: corporate governance. At its core, UT Bank had always been a founder-driven institution. Kofi Amoabeng was not just the CEO. He was the face, the leader, the decision-maker. But as the bank expanded, that model became harder to sustain. Internal checks and balances weakened. Some high-value loans were approved with minimal oversight. Decision-making, once an advantage, was now a liability. By the time auditors raised concerns, the problems were already too deep. The numbers on the balance sheet no longer told the full story. Profits looked strong, but in reality, UT Bank was sitting on a growing pile of bad debt. Still, there was hope. If the bank could secure fresh capital, it might survive. But then, the regulators stepped in. Chapter 4. Aftermath and Legacy. The Unfinished Story. Please subscribe to the channel. The morning after the collapse, UT Bank's headquarters stood eerily quiet. Employees who had spent years building the institution walked into their offices only to find Ghana Commercial Bank officials taking over. Customers, some confused, others furious, lined up outside the branches, demanding answers. But the truth was, there were no answers that could satisfy everyone. Kofi Amoabeng, once the face of innovative banking in Ghana, found himself on the outside looking in. His life's work had been dismantled overnight, and now the questions began. How did it come to this? Could UT Bank have been saved? Or was there something more at play? Beyond the financials, whispers of a political twist grew louder. UT Bank's collapse wasn't just about bad loans or liquidity shortages. Some believed there was a deliberate effort to push certain banks, certain individuals, out of the system. And at the center of the speculation was a relationship that had once been professional, but was now the subject of hushed conversations and raised eyebrows. Kofi Amoabeng and Ken Ofori-Atta. Both men had carved their names into Ghana's financial landscape. One, the ex-military entrepreneur who built a bank from scratch. The other, a Wall Street-trained investment banker who now held the nation's purse strings as Minister of Finance. Once allies in the private sector, their paths had diverged sharply. And now, some asked whether UT Bank's downfall was purely a business failure, or if there were other forces at work. Did UT Bank's collapse serve a larger agenda? Was it simply a matter of financial mismanagement? Or was Kofi Amoabeng's empire caught in something bigger than just banking? That question, like so much about UT Bank's downfall, remains unanswered.
For some reason, God put us in the best part of this earth, where the climate is fantastic, there's no snow, there are only small variations in temperature, and the vegetation is green almost all the time, almost all the areas. And there are no natural hazards. People just lived in abundance. You didn't have to struggle to be fed, and they lived in such a condition or environment for hundreds of thousands of years, if not million years. It's a fact that in this world, the environment shapes the lives of every living thing. And for our environment, it made us create cultures, behaviors, attitudes around the environment that we had, the environment of abundance. We are lazy generally. We don't plan for tomorrow. We don't keep time. We don't know maintenance. We are disrespectful. We don't care about the general good. All these can be explained by the theory of abundance. I'm Captain Prince Kofi Amoabeng, retired, and I'm an African business leader, and started business in Ghana after leaving the army some 40 years ago. We started from one room, the center business area of Accra, and with a staff of 3, and grew this to become the biggest non-bank financial institution in about 2010, when we transformed it to become a bank, a universal bank called UT Bank. After the bank had also achieved some successes, the bank obviously ran into problem, and the government decided not to bail it out, but to collapse it. Now, after that, I have decided to form a PK Amoabeng Leadership Foundation. The aim is to actually document the transition from a one-room business into a universal bank with affiliate and subsidiaries like UT Properties, UT Logistics, UT Private Securities, UT Life, and other companies. And we became a household name, and we built a brand that was known across Africa, and a brand that had even footprints as in offices in Nigeria, South Africa, and Hamburg in Germany.